the deduction that's available, the government's not giving you free money, okay? You, as a business owner, when you go buy equipment or you go buy, if you're a construction company and you got, some big projects, big contracts on the books for next year, and you're looking to, beef up that equipment suite and buy some new tractors, trucks, whatever. When you do that, the government's not saying, hey, this year you get a free rebate.
Welcome to the AMG Podcast, helping you stay informed, stay empowered, and stay successful. We're here to help you build the life you were made for and prepare for what's next.
Welcome back to the podcast show here at Asset Management Group. I am Andrew Nida, sitting beside Mo Param, and every single week we're here to break down economic trends, tax strategies for businesses, new laws that are coming into place, basically simple ways to think on how to make sure that your money is working the best it possibly can for you. That's what we're here for today. Excited, man. Got a good show.
Excited. Last week we talked about the One Big Beautiful Bill, the 870-page document that was put in place July 4th of this year. And we talked about it in the big picture, the big grand scheme of how it impacts basically everyone. But today we're going to narrow it down just a little bit and talk about the One Big Beautiful Bill and how it impacts business owners. And at the end of the day, their profit and loss sheet, like the end of the day, growth.
Yeah.
And that's what I think when I look at the One Big Beautiful Bill. If I were to summarize really what it's all about, it's about how to stimulate the economy and how to bring growth back into America and really bring more dollars into everyone's, bank account in their pocketbooks.
And that's exactly what this bill does. Before we jump in, like Mo said, if you haven't seen the initial video that we did to kind of cover a wide scope of what the bill is, make sure you go back and look at it. And if you like this content, make sure you stay with us on this show. Like it, follow us as we continue, to create what we believe is great educational information to make sure that you're making the best decision with your money for your future. All right, let's jump right in here.
Okay.
So we're talking about the Big Beautiful Bill and how it impacts business owners and, more importantly, how it impacts the P&L, the bottom line, okay? Now, as business owners ourselves, I think probably one of the best ways to just talk about this thing is to think, basically allow our viewers and listeners to kind of have some insight on how we think. Like how does this bill affect Asset Management Group in the way in which we think about spending, investing with our business money here to enhance the growth and development? How are we going to take advantage of it? And I think that's kind of the lens we should look through as we break this down.
Right. The first thing I could think of is like research and development in some areas, right? I mean, we do a lot of research for our clients, for us. We're constantly looking at ways to to improve and enhance our processes. We're looking to expand, we're looking to grow, we're looking to hire. And so when I think about the way the new bill impacts the tax relief that you get for research and development, I'm thinking about ways that, we've talked about maybe creating an app or creating a more of a intuitive dashboard for our clients, so that way they can be more in tune with their plan itself. And so with this new bill, we're able to take a full deduction on our expenses with respects to any type of research or development, anything that we're using to improve our business.
Yeah, look, technology's going crazy. Right? If you're a business owner and you're not thinking about how to keep up with technology, you're not looking to advance the internal mechanics of your business. Right. You and I were talking about this. I don't know if you read the recent article about earnings and some of the releases that are coming out this week, but Google just released that they are increasing their capex spend. Oh, it's something I don't know if I can say the exact numbers, but the figures, but I think it went from 8 billion to 80 billion. It was something ridiculous. And it's the article came across as if, okay, Google's coming out saying, hey, we're not out of this AI race. We're ready to get back in. And I'm like, no, they're not. They're ready to participate in this new tax law, But to your point, the R&D, which is this law, and that's the way tax laws work. Tax laws are put in place for a specific purpose for us to take advantage of. And you have to look at tax law that way. And so you look at this tax law, and it's Section 174, and it basically allows business owners to keep resources in their pocket, in the bank account for business development and growth. And in today's world, you have to. Here at Asset Management Group, we have got to continue to reinvest and even push on the pedal a bit on, new technology, quicker efficiencies and processes, the utilization and the integration of AI. Like, we have to put money there. And now with this new law, we basically get paid back to do that. Right? So, like you said, we get this 100% depreciation, which is, it's huge.
Yeah. I mean, it allows us to, like you said, grow, bring on new members to the team that can help with that. And so instead of us thinking about these different tools and softwares and technology ideas that we had in place that were, we were thinking about it was on the board, and maybe we would have pushed it to 2026, right? But now in 25, we're able to move and advance those projects just a little bit sooner if we need to, and take advantage of the situation now.
Yeah, and I think, when we talk about this like accelerated depreciation or, this deduction, a lot of times people are, maybe they get it confused. It sounds like a gimmick or whatever. But remember, the deduction that's available, the government's not giving you free money.
Right.
Okay. You, as a business owner, when you go buy equipment or you go buy, if you're a construction company and you got, some big projects, big contracts on the books for next year, and you're looking to, beef up that equipment suite and buy some new tractors, trucks, whatever. When you do that, the government's not saying, hey, this year you get a free rebate, to get some money back. All you're doing is the government is allowing you to take what otherwise is the normal depreciation over a set time frame, typically 5 years, 10 years. If it's real estate, it can be upwards of 27 plus years. Commercial's even higher than that. And they're allowing you to condense it into 1 year, okay? And that means, instead of buying an investment that you can't, it costs you more today because you can't deduct it all, meaning that you're out of pocket at a greater level today, but you get that even deduction over time. The government's allowing you to keep that money back in your pocket today to continue to fuel your business.
Right.
And it's huge. And I think the research and development is a heck of a way to, with all that's happening, to get these companies, to continue to invest here locally, domestically in their business.
Yeah, it just makes you able to just be a little more profitable, right?
Yeah.
And expand and accelerate your growth just a little bit faster.
Yeah, it's needed, man. It's needed with this. I don't know. I shake my head every time coming in. I'm like, man, there's new apps. You don't know what to sign up for. My handicap is I think I sign up for a new app every night. If I can't fall asleep, it's like somewhere around like midnight to 1 a.m. I'm coming with a new app, a new something.
Well, that's the thing, right? Just technology is just moving so fast, right? And for what I know for our business is that we have to be ahead of the game. Yeah. And so even if it's just for a small season, we don't want to get too paralyzed and try all these different apps without being a master of one.
Right.
But again, you kind of get lost sometimes with all the new different developments that are happening. And I think that we're going to start seeing that even exponentially over the next few years, because now ththese companies are really incentivized to really speed up growth and in this world that we're living in.
Which
right
is
now.
why if your business is spending money on research, which you're going to have to, because like you said, there's so much to work through. The government's going to allow you to get that deduction and depreciate it. So look, I don't know of a business right now that's not doing that. So I think, if you are doing anything on the growth side of your business right now, this is a tax law you should be taking advantage of. Speak with your CPA. Some of these tax laws are advanced, and you need to be working with a tax professional. Here at Asset Management Group, we can definitely help you out. If you have a CPA, an accountant, make sure that you're working with them early in the year, letting them know exactly what you're looking to accomplish so that your bookkeeper, your accountant can make sure they organize the books in preparation for that deduction.
And really think about, big picture. Take a step back and look at, we've talked about it. We have in our dashboard. Actually, the meeting we had the other day with Shelly, we looked at the projects that we had on the table for this year. And what we're going to do now is start looking at, okay, what projects do we have that we thought about the beginning of this year? Well, actually, the end of last year. What projects do we want to accomplish in 2025? Now we're halfway through the year. Are there any things that are left on the table that we need to move forward with? So as a business owner, I think this gives you a good opportunity to maybe look at, okay, if you had these projects in line over the next 5 years, are there any projects that you want to move forward with? Remember, the deduction only takes place if you actually do the research the year you want to take the deduction, and you start developing that year. Yeah. So you can't move 2027 research and development and start taking the deduction now. You've got to start implementing and start putting those things in motion today. So
look, again, when it comes to tax strategy, and really this is for you as an individual, you as a business owner. When it comes to tax planning and tax strategy, it has to be almost well thought out a year in advance, depending on the strategy. Mm-hmm. I mean, it doesn't matter if you're looking to deploy. I mean, like as an example, if you don't have just a simple employer-sponsored plan, right? The deadline's coming up.
Right.
You want to have a safe harbor plan in 2026?
It's coming up this month.
Absolutely. You got to get that document and that plan implemented soon. In August, I believe is the deadline, right? Yeah. If you're looking to purchase real estate or property, which is the next thing we can talk about, and utilize a Section 179 or an accelerated depreciation using a cost seg study on a real estate property or something. You have to do that well in advance. So, you got to have a tax plan, just like you have an investment plan, just like you have a plan for your regular day ahead. That way you don't wake up thinking, man, what am I going to do when I'm filing my return? No, you're the start of 2026, or at least now for 2025, thinking, I know exactly what I'm going to do between now and the end of the year. And when I do it, I know the impact of it for those returns. So accelerated depreciation, Section 179, I'll give some personal stories here, but this is one of my favorites.
Yeah, it's nice. I think we're going to start to see. I think the real estate investors were just sitting on the edge, waiting to see what this bill would do for them, and I can imagine all of them jumped up and down. Now they're able to accelerate the depreciation for their investments.
So I got to put you on the spot here.
Go ahead.
What do you think about new home sales falling still? And home sales in general across the country are down.
Yeah.
So investors are sitting here waiting. We know that this tax law is a push for them to consider it, right? To get in the game. Mm-hmm. There's some mark off, if you will, already if they utilize this tax law correctly. But the momentum isn't there right now.
All right.
Real estate market continues to slow down. So what do you think? You think interest rates got to go down? What's the break here?
They pause. They're pausing this month, right? So they've already said they're going to pause this month. But I think, between now and the end of the year, we're going to have to see at least one rate cut, because again, I think that this whole bill is to stimulate growth, and so this is step one, allowing us to accelerate the depreciation immediately. Mm-hmm. And that's a nice kicker, an incentive for investors. But another incentive is let's make borrowing cheaper.
Yeah.
And so it would be,
which we know,
in my opinion, I think it would be foolish if we don't at least get one rate cut.
Right. The administration is a clear push.
Yeah.
Right. I mean, obviously, I agree 100%. I mean, the long-term impact is the concerns on the other side, I guess, or a different perspective would be, inflation coming back. But to your point, like when I look at this law specifically, this Section 179 and this accelerated depreciation coming back to 100% on January the 26th or whatever of this year, right? In my first thought when I was looking at this bill originally was like, if this gets passed, it is game on for real estate investors for the next 4 years.
4 years,
yeah, like it's game on. If they're in a situation where they can take advantage of the accelerated depreciation laws. And there's some theory out there that there's a true real estate bust I've read about, in like 2030 or 2031 or whatever. But like this season as an investor, if they're leveraging this law correctly, they can literally go in and let me see if I can't give you guys some examples. I'll welcome you into my picture here. Mo and I own businesses, And as a result, when those businesses go out there and they create revenue, we pay ourselves a salary. But at the end of the day and at the end of the year, after bonuses are paid and after everything's been put out, whatever's left on that P&L is passed through unless you're filing as a C Corp. So and we didn't get the C Corp tax law change that we were hoping for. Maybe that would have been a different approach. But being that it's a pass through, it passes through to a personal 1040. Right. And so even though you may get a salary as a business owner, now you have this income that you may even be leaving in the business, not even taking it out as personal expenditures, but it's added to your income, throwing your income tax way up, even though maybe your lifestyle isn't there. And so as a real estate investor, as a business owner that can take advantage of these accelerated depreciation laws, you can go out there and you can purchase real estate. You can build wealth with what otherwise you're going to give the government, right? So if you're a business owner and your tax liability after all the expenses have been written off for the business and your W-2 income and your tax liability sitting at $150,000, $200,000 in liability that you have to give the government, you could potentially go out there, look and find a short-term rental property as an example, buy a short-term rental property for $450,000, $500,000, take the property, do a cost seg study, and depreciate potentially $300,000, $325,000 against your income that year as a loss, untapping that passive loss against that active income. Now, all of a sudden, your tax liability that was $200,000 because you made $500,000 income that year just got slashed down to $200,000 of income and a $45,000, $50,000 tax liability. So you went out there and invested what otherwise you were going to give the government.
Yeah.
You were going to write a check to the government for $175,000 or $180,000 check, and you literally gave them $40,000 and took what otherwise was going to be theirs and invested and created a personal asset. I mean, that's the advantage of these laws. And you say, okay, well, as a viewer, that seems like it just helps a business owner. Not really.
Not really.
Yeah. So you go out there and buy real estate that you're able to rent and to help other people with, or you buy property for your business. You buy a new office. You buy a new product. You buy new technology. You buy new software or hardware, trucks, tractors, right? All of that goes and does the exact same thing for your business. So now your staff members are using upgraded computers, right? We're using updated technology. Their processes are more efficient. They're not sitting there drained and drowned by these bottleneck problems in your systems. Huge,
very huge, very huge. Yeah, no, it doesn't. One of the key things is, again, we're talking to business owners. One of the key things is you have to be a business owner, but it doesn't just only impacts the investor. It really does impact it impacts the business owner bottom line, but it also impacts your employees. You talk about companies that might have to buy new fleets, right? I mean, you're able to, and these semi trucks cost $150,000. Again, you may be kind of holding off on making that purchase right now, but now you make the purchase, you get the depreciation, you boost the morale with your employees because, like you said, new technology, new cars, new trucks, new equipment that they're using. Again, and it can make your business grow even faster.
Yeah.
So it's huge, right? And then you don't have to use all of the deduction all in one year. Part of planning is, okay, well, do I want to create the loss this year? Maybe you mentioned my real estate. Maybe there hasn't been much of income this year as a real estate investor. Maybe next year you want to use all of it or some of it. So again, part of the planning is understanding what the laws are and then seeing how and when to actually implement them. Just because you can depreciate 100% today doesn't mean you have to. It may not be the best tax efficient way. You may want to stretch it over 2 or 3 years.
Yeah, exactly. Right? And I think I have found, and maybe you have witnessed this too, when it comes to the world of tax planning. When you work with a CPA, And there's a lot of fantastic CPAs. I know we have relationships with a lot of great accountants and tax professionals that are in the industry that really take time to think through someone's story. But one of the challenges I think you face with a relationship that's not fully integrated into your story is the focus oftentimes is either we're looking for what can maximize the reduction in tax today, which is one thought process, right. Or there's this idea of, you shouldn't invest with the forefront being tax deduction. Like when you're choosing an investment as an investor, you have to ask the question, what am I trying to accomplish
right.
here?
What's my goal here?
What's my goal here, right? And a lot of times, and I would agree with this, you don't want to just go buy real estate just because you want the deduction, okay? And maybe the deduction is beneficial financially, but if you don't know anything about real estate and you don't know what it takes to manage real estate,
right.
Or manage rental property, et cetera, you probably should take a step back, okay, and make sure you understand that this is a true business venture. It's another business leg, if you will. So working with a tax professional that's going to have the expertise to literally help you take advantage of these laws. Not every tax professional can do that. Not every CPA can do that, unfortunately. A lot of business models that we have found with working with CPAs, even personally, is they're condensed, meaning that their sales cycle with clients are oftentimes January through the tax deadline, and then those that follow an extension. And so it's high volume, they're pressure, they get worked to death, and they don't have enough time to think through someone's story. And so you want to make sure you're working with especially as a business owner. Right. If you're going to implement these advanced tax strategies, work with someone that you can collaborate with, build that team.
Yeah, and we're part of that team. I mean, that's why it's so critical that you have someone or a team that's looking for you, not just for today, but or can look and forecast, 5, 6, 10, 15 years down the road, because some of the decisions you make today have future consequences and ramifications down the road.
Right.
So when we're working with our clients, the beauty behind working with their CPA is they can look at tax incentives and ways to reduce their taxes today. We look at today, not just today, but we're looking beyond tomorrow. We're looking down the road. And between the two of us, we can make that story and solve that puzzle more crystal clear.
Yeah.
Because we're looking at more areas than just one sleeve of their overall plan.
Yeah, I think you said that perfect. If you are a business owner, and you have a business that's generating solid net revenue, and you have what you feel is a tax problem, you should have an excellent CPA. You should have a financial firm that collaborate together, even a tax attorney. Here at Asset Management Group, we can provide the accounting. We can provide the tax strategies. We can do that. But we also, with a lot of our business owners, we're working hand in hand with their professionals they already have because they know the story.
They know the books.
And collaborating. And look, every tax law we've talked about, there's a caveat, right? There's always an incentive. There's always a give. Right. And so working together just to make sure, like you said, that the decision doesn't make sense just for today, but it's today, tomorrow, every single year. And that's exactly what we're trying to do with business owners to ensure that, once again, their money is injected and infused back into their business, back into their people, back into technology, and they see that momentum they expect to see.
What we got next?
What we got next? I don't know. That sounded good. There's a lot here in this tax law, man. Pass-through inequity incentive, Section 163. I mean, it's a lot of intense.
Yeah, I think another thing is, deductions on interest loans for businesses.
Right.
That's huge. Just like you, if you take out a loan, you're paying interest on the loan. And for businesses, they were able to deduct some of that interest. But now they're able to deduct a higher percentage off their EBITDA. And that is huge, right? Because now it's, again, I said it from the beginning, this bill is used to incentivize growth.
Yeah,
and
for sure.
And so now for businesses able to deduct more of the interest that they're using for loans, it's more incentive to borrow. Right. And then they're getting a reduction, so it frees up more cash flow. Again, allows them to expand and to grow, to borrow more, and in the idea of developing their business. So I think that's another huge thing. Businesses able to deduct more of their interest is key. It's huge.
I wonder if that really is the hang up for the feds. if they know that everything here is a push to spend and a push to grow, and they're holding the rate because they know that the money's there to spend, right? I mean, even if you look at earnings, like earnings right now, Q2 posting is the season we're in. Earnings are at all-time highs, and they continue to be above expectations for most companies. You're hearing the spending reports and the expectations of investments from these companies huge, right? We've got the S&P 500 hitting all-time highs. We've got the S&P 500 weighted to one company at a greater level in history. Okay, NVIDIA at 8% of the S&P. The Mag 7 still the story. Yeah, they've been the story for years. They're still the story, and so like money is there to spend. Businesses have it to spend it. Yes, goods are high, but this whole law is to lower the tax burden and give the flexibility to continue to spend. If interest rates drop, I mean, you're thinking about strategies out of the box. I'm thinking, okay, well, now a business can go borrow, okay, a significant amount of money if they wanted to at a very low rate, turn around and invest it in the business, accelerate the depreciation off using the bank's money at near to none cost and getting the tax benefit, keeping their money still working in the business.
And we're starting to see it. I mean, capital spending is up 16.6% the first half of this year. Small cap companies, economists are saying that earnings could rise about 12% due to these changes. Overall corporate earnings are projected to be 3 to 5% higher in 2025. So we're starting to see it. We're starting to see the spending, and the forecasts are saying that these, especially small businesses, are going to be. So small businesses have been hemorrhaged a little bit over these last few years with rising interest rates and their lack of ability to spend. And so now it gives them, again, more incentives to spend, building growth. We're starting to see the impact overall.
Well, and I think small business. I think the key with small business, and I could be wrong 100%, but for us as small business, which really is the foundation of the U.S. economy, okay, it's small business. That said, everybody knows the impact of AI technology as it sits today, right? We know it's going to be huge. We know it has been huge. We know that it's getting laced into everything that we do. We know that you don't have to go to the grocery store anymore. You can pick up the phone or get on your computer and all of a sudden you got groceries at your door, right? You don't have to go to the fast food restaurant. It gets delivered to your house, right? All these things have become a part of our life, and all of those tools haven't had an impact on small business. And so small business to be able to continue to try to maintain their market share of their community, to me, they've got to ask, what does my business need to look like 2 years from now, 3 years from now, 5 years from now, and what do I need to invest in today to do that? Most of us don't know how to invest or what to invest in because it's just not our skill set. We don't know about what app stacks we need to go and push for or what AI technology platform we need to have laced and integrated into our systems. But you need to invest. That's why research and development is there for the deduction. These small businesses got to put money back to work in their business, and they got to take the time to take advantage of these tax laws.
Totally agree. Totally agree.
Good place to wrap it up.
Yeah. I mean, that's a lot. Again, this is a big bill, and we don't want to try to condense it all in one show. So we'll continue talking about it because everyone's talking about it, and we still have 5 more months actually, for the rest of this year to continue talking about how to plan using a one big beautiful bill and make yourself more efficient and more profitable in 2025 and beyond. So good way to wrap up for today.
Yeah,
we'll
absolutely.
come back next week, and as always, like, share, subscribe, and join us next week as we talk about more ways to be more financially savvy in 2025 and beyond.